Nigeria, a country endowed with vast human and natural resources, finds itself grappling with formidable economic challenges. High interest rates and soaring inflation have cast a long shadow over the nation's economic prospects. These interconnected issues impact the lives of millions of Nigerians, eroding purchasing power and hindering business growth. This essay delves into the complexities of Nigeria's economic situation, examining the interplay of key factors and their implications for the country's future. The Nigerian economy, heavily reliant on oil exports, has long been susceptible to global price fluctuations. However, recent years have witnessed a confluence of internal and external shocks that have exacerbated the country's economic vulnerabilities. From dwindling oil revenues to supply chain disruptions and policy uncertainties, Nigeria faces an uphill battle in its quest for economic stability and sustainable growth. Understanding the root causes of these challenges is crucial for formulating effective solutions that can steer the nation towards a more prosperous future. To comprehend the depth of Nigeria's economic struggle, it's essential to examine key economic indicators. These indicators paint a stark picture of the challenges confronting the nation. Gross domestic product growth, a measure of the country's economic output, has been sluggish, hovering at 2.7% in 2024. This tepid growth rate is insufficient to absorb the burgeoning workforce, leading to a staggering unemployment rate of 33.3%. High unemployment, particularly among young Nigerians, poses a significant threat to social stability and long-term economic prospects. The manufacturing and trade sectors, crucial for job creation and economic diversification, have struggled to gain momentum due to high operating costs, weak domestic demand, and persistent supply chain bottlenecks. Meanwhile, the oil sector, the mainstay of the Nigerian economy, grapples with production constraints stemming from insecurity, aging infrastructure, and global market volatility. Adding to these woes is the relentless surge in inflation, which reached a staggering 29.9% in early 2024. This surge in the general price level has eroded the purchasing power of ordinary Nigerians, making essential goods and services increasingly unaffordable. Food price inflation, driven by factors such as supply chain disruptions, high transportation costs, and the depreciation of the naira, has been particularly acute, pushing millions of Nigerians into food insecurity. The relentless surge in inflation is arguably the most pressing economic challenge confronting Nigeria. Inflation erodes the value of savings, diminishes purchasing power, and disproportionately affects the most vulnerable segments of society. For a country like Nigeria, where a significant portion of the population lives below the poverty line, high inflation can have devastating consequences. Several factors contribute to Nigeria's persistent inflationary pressures. The depreciation of the naira, driven by factors such as declining oil revenues and capital flight, makes imported goods more expensive, fueling cost-push inflation. Supply chain disruptions, exacerbated by global events and domestic logistical challenges, create shortages and drive up prices. Additionally, government policies such as fuel subsidies, while intended to cushion the impact of rising prices, can distort market mechanisms and contribute to fiscal imbalances in the long run. The social consequences of high inflation are profound. As food prices soar, millions of Nigerians are pushed into food insecurity, leading to malnutrition and health problems, particularly among children. The rising cost of living also fuels social unrest and erodes public trust in government institutions. Addressing inflation requires a multifaceted approach that tackles both the demand side and supply side factors driving price increases. Section 4. High interest rates, a barrier to growth. In a bid to tame runaway inflation, the Central Bank of Nigeria has resorted to raising interest rates. The monetary policy rate, a key benchmark interest rate, stood at a record high of 22.75% in 2024. While high interest rates can help curb inflation by discouraging borrowing and reducing consumer spending, they come at a cost. High interest rates make it expensive for businesses to borrow money for investment and expansion. This can stifle private sector growth, hindering job creation and economic diversification. Moreover, high interest rates increase the cost of servicing government debt, diverting scarce resources away from essential public services such as healthcare, education, and infrastructure development. The dilemma faced by policymakers is stark. Curbing inflation through high interest rates risks stifling economic growth, while lowering interest rates to stimulate growth could exacerbate inflationary pressures. Finding the right balance is crucial, and it requires a nuanced understanding of the complex interplay between monetary policy, fiscal policy, and structural reforms. Section 5. Currency depreciation, adding fuel to the fire. The depreciation of the naira, Nigeria's currency, has exacerbated the country's economic woes. A weaker naira makes imported goods more expensive, fueling inflation and eroding the purchasing power of Nigerian consumers and businesses. Several factors contribute to the naira's weakness. Declining oil revenues, driven by a combination of production constraints and global price fluctuations, have reduced the inflow of foreign currency into Nigeria. This decline in foreign exchange earnings puts downward pressure on the naira. Additionally, capital flight, as investors seek safer havens for their capital amidst economic uncertainty, further weakens the currency. Addressing currency depreciation requires a multi-pronged approach. Efforts to boost oil production and diversify the economy away from oil dependence are crucial for increasing foreign exchange earnings. Attracting foreign direct investment through policy stability and a conducive business environment can also bolster foreign currency reserves and support the naira. Section 6. Government reforms, a glimmer of hope. Recognizing the urgency of the situation, the Nigerian government has implemented various reforms aimed at stabilizing the economy and fostering sustainable growth. These reforms focus on improving revenue generation, diversifying the economy away from oil dependence, and strengthening fiscal management. Efforts to improve tax collection, broaden the tax base, and curb tax evasion are underway. The government is also promoting non-oil sectors such as agriculture, manufacturing, and technology through initiatives aimed at improving infrastructure, providing access to finance, and fostering a more business-friendly environment. However, significant challenges remain. Insecurity in parts of the country, coupled with policy uncertainty and bureaucratic bottlenecks, hinders investment and impedes economic progress. Addressing these structural constraints is crucial for creating an enabling environment for businesses to thrive and for attracting much-needed foreign investment. Section 7. Conclusion. Navigating the path to economic recovery. Nigeria's economic challenges are complex and multifaceted. Soaring inflation, high interest rates, currency depreciation, and fiscal imbalances pose significant threats to the country's economic stability and social well-being. While the government has implemented reforms aimed at addressing these challenges, significant obstacles remain. Navigating the path to economic recovery requires a sustained commitment to fiscal discipline, structural reforms, and policies that foster private sector growth and job creation. Addressing insecurity, improving infrastructure, and creating a predictable and transparent regulatory environment are crucial for attracting investment and unleashing the country's economic potential. The task ahead is daunting, but not insurmountable. With sound economic management, a focus on human capital development, and a commitment to good governance, Nigeria can overcome its current economic woes and build a more prosperous future for its citizens.